Thank you for the commercial opportunity. We are a digital native business, and that comes with its own inherent advantages. It means that we are more agile in responding to capacity and transaction such challenges compared to traditional players in the financial system. Our infrastructure are much more new. They are digital end-to-end most times. They are largely cloud-based. For those of us who are familiar with technology, we are not talking of servers that are physically on the ground. Therefore, if you need to expand capacity, you need to go and get something physical to put in a big server, procure it. The decision to expand to respond to demand for transaction capacity is, for us, is largely overnight. So we are seeing the benefit of a smart, intelligent technology back office that OPay has in responding to some of the surge in the digital transactions that has enabled OPay to be seen as a preferred, reliable platform for payments today in Nigeria. Thank you.
Thank you very much. Someone was saying that we shouldn't go too far into the commercial because they already know what to do. So we thank you for coming to the rescue of quite a lot of people, including me. I'm trying to see whether I can open. I've downloaded the app and I want to, because that's the only way you can send money to Uber driver. This is the thing that we do. So thank you very much for being there. Well, my internet is still not solid, so let me just go off camera for now. So I've posted your short bio, I hope it is right, in the chat room. So anybody who wants to read it can read it. This session, we're discussing financial inclusivity. And you're on this same panel up till 4 o'clock to 6, yourself and Bumi Lawson, who is the managing director, and if I call her Madam Microfinance, she's the only one I have known forever about microfinance, Akon Microfinance. I think I even did some things with them. And so she's here to talk on the other side of what you'll be talking about. You are both discussing financial inclusivity. Before you joined up, I was telling the earlier session that the reason we brought the two of you, because we now notice, we are doing documenting the underserved. We're saying documentary or art and media in the service of the underserved. Now, this whole event has shown, this whole Naira redesign and the crisis has shown that the underserved, we have actually been underrating the impact of some of our policies on the underserved. We don't necessarily think about them. If people say they want to stop vote buying and then you just cut off everybody, now the bank do not have the digital infrastructure to be able to carry all of us. That's why transactions are failing, our monies are getting trapped and go. So we want to see how we can explore the whole idea of financial inclusivity to serve the interest of the underserved. I don't want to use the word poor, because that's what we like to use, and we just condemn them to that. So you can lead us into your presentation. I think we'll make you a co-host so that you'll be able to share your screen if you are sharing screen. Otherwise, you can start by speaking while we sort that out. Please go ahead.
Yeah, thank you, Brother German. Thank you for the invitation. I will just be speaking. I will not be sharing a PowerPoint, but I'm sure you'll be able to follow me. Let me say thank you again to iRep and congratulations on all the good work that you have been doing over the years. iRep has become an institution. I remember when it all started. Now it's what it is. Well done for all the good work that you do. Let me also say that it's also a privilege to be sharing the stage to talk about financial inclusion with Mrs. Lawson, who is a veteran in this space. And I'm sure that we are going to have a very interesting session, both of us talking about financial inclusion from perhaps similar and different perspectives. In terms of the outline of my talk today, which is titled Documenting the Underserved, the case for financial inclusivity. I'll be talking about 9 sections of my presentation. Don't be scared. I should be able to run it up in about 30 minutes or so, 35 minutes. I'll be discussing first the underserved in financial inclusion. Then I will discuss Nigeria and the problem of large social exclusion. Then number 3, I will talk about a tale of 2 countries. Number 4, I will discuss the different lenses of seeing the underserved from the viewpoint of financial inclusion, or perhaps even your viewpoint from where I sit. Then I will discuss citizens' rights and financial inclusion, which should be very interesting. Then number 6, towards the conclusion, the case for financial inclusion itself. Number 7, we talk about digital technology and financial inclusion, because there is no financial inclusion without talking a little bit of technology. And then towards conclusion, we talk about, I will discuss the role of arts and perhaps iRep in financial inclusion, and we conclude. I should be able to do that over the next 35 minutes or so. So the case for the underserved in financial inclusion. So I commend again iRep for practicing socially relevant art. These are the days when sometimes we have forgotten what should be the greater purpose of arts. Art for art's sake, art for entertainment alone. But what you do in iRep is art for social impact, which is exemplified by the topic of the theme of the celebrations over the last few days. And I commend what you do in terms of progressive arts for social impact that the mission and the values of iRep represents. Who are the underserved? I will share a couple of data from financial services industry. Nigeria has just about 51% of its population that are formally served by a financial or bank account. The numbers might have changed maybe a little bit, because these are like a 2-year-old data. That data is published every 2 years. But at the rate at which it has been growing, maybe it will change by 2 or 3% a year. But we could say that 53% of the Nigerian population are those who have a formal financial account. That is a bank account or a wallet account, maybe with an app or thereabout, maybe until recently. And that has important implication. What it means is that 50% or so of our population in Nigeria, of our people in Nigeria, do not have a formal financial account. They might be served by agency banking that people like OPay, like we provide, along with our services. For example, everywhere you go in Nigeria, you are likely to see an OPay agent also providing cash in, cash out services. But financial account is the basic and the most important foundation of financial inclusion. I will talk a little bit more about it. Half of our people in Nigeria do not have a formal financial account. Among the banked, if you look at the whole population of Nigeria, there are also some important data. One is that whereas 50% of the population have formal financial account, just 3% of our population have access to credit. 3%. In fact, the interesting data is that payments in Nigeria over the last decade have grown from 22 to about 45%, have actually doubled. But access to credit is virtually stagnant, largely 3%. And there are very important implications in our access to credit. The foundations of wealth for a lot of people that we see, the rich borrow. If the poor, if the lower income could also have access to borrow, they will also be prosperous. So this is a very big problem. But without a financial account, we don't even know who you are, so that the basis, so that you can even borrow in terms of the modern financial system. Savings is just 32%. Insurance usage is just 2%. Access to pension is just 7%. So you could see, apart from the bank, when you take out account, then you also see that there are large sections of people who are banked, but they are largely underserved by things like insurance, like credit, like pension. And when you imagine things like insurance, a woman that was a shop, there's a fire, there's a fire incident, that virtually can sink that person, that woman selling in the Dumont market or somewhere into poverty because of very poor access to things like insurance. So we have the banks, but we also have among the banks, large sections of which are underserved by different forms of financial services that could engender wider prosperity. So one of the important things I want to talk about today in this section is that it's important that we also clarify the synonyms, that there's a difference between why they may sound meaning conceptually close together. There's a difference between the underserved and the excluded. And especially as financial services are concerned, and it might have implications in terms of what you also do on the art, that it's even good to be underserved. There are a lot of people in Nigeria who are completely excluded from modern financial services. And we're talking of the 50%, they don't even have any touch with modern financial services significantly in any way, maybe largely outside cash in, cash out of agency banking. So as an important synonym clarification, that the underserved is not necessarily the excluded, and the excluded and the underserved, while they may be similar, the problem of the excluded, which is largely bigger than even underserved, is a much bigger problem. But I suspect that what you also have in mind conceptually in terms of choosing your team at iRep is also, you're also talking about the excluded and the underserved. Maybe we can interchange their synonym together. So in terms of Nigeria and the problem of lateral exclusion, which is what I want to talk about now, to share the data from the National Bureau of Statistics, published last year, towards the end of last year, because we can't talk of the underserved without talking of Nigerian poverty indices. 133 million of our people in Nigeria, out of 211 million people, are multidimensionally poor. So 63% of the Nigerian population are multidimensionally poor. And this 133 million, this 63% of our population that are multidimensionally poor have strong correlation to being underserved, being excluded, and to poverty. So exclusion, being underserved, and poverty are all very correlated. So we have a large problem of social and market exclusion in Nigeria. Because first and foremost, when you look at the way we think, those of us in business, anyone who cannot pay us profitably, we exclude them from the concept of what we call our own addressable commercial market. So what you can see is that if 60% of the Nigerian population are poor, our commercial businesses across housing, finance, education, energy, nutrition, sanitation are largely not serving 60% of the Nigerian population. And that is likely what would be the exception, maybe, and that's a very important areas like telecoms, and that's the power of technology. Most of our businesses today in Nigeria are largely irrelevant to like 60% of our people in Nigeria. Housing, finance, education, health, they are a large problem of social and market exclusion in Nigeria. And there are also important dimensions of the acute social exclusion that we have in Nigeria, in terms of geographic dimensions. 65% of the poor people of the poor in Nigeria live in the north. And there's about 86 million people. That's a large population, for God's sake. 35% are in the south. So it is not just a northern problem. And just to give two examples of two states, Sokoto State has 91%. 9 out of every 10 people in Sokoto State are poor, multidimensionally poor. But you would think it's only a northern problem. Bayelsa, our richest, one of the biggest, big oil producing state, has 89% of its population poor. So the problem of exclusion, social exclusion, is not even a northern problem. By the time you take Lagos out of the data, you begin to see a completely different reality of Nigeria. And when you also now triangulate with financial inclusion data, you also see some interesting correlation that financial exclusion is highest in the north. Most of the states in the north have maybe in the range of 20% of people who have a formal financial account. So at least 8 out of 10 people you find in northern Nigeria do not have any form of financial account, formal financial account. But you also think it's a Lagos problem alone. Take out Lagos. You see something interesting. Imo and Ebonyi, the range of the amount of people who have former financial accounts is just about 25 or 26, 27%. And that tells us the challenge that we have, that a whole lot of our people are excluded from formal financial services. If you look at a place like Owerri, for example, all the banks, and that's typical of a state capital, all the banks, whether anywhere you go, they are typically in the state capital. But outside, as you move outside the state capital, if you do not have any, you cannot find a bank. And e-banking has to be dependent on the bank branch, which has been the historical problem of inclusion in Nigeria. A lot of our people will not get served by formal financial services. So there's an overlap of what I think is the iRep concept of the underserved and the problem of large and acute social and market and commercial exclusion in Nigeria, because they all correlate. Commercial exclusion in business, social exclusion and market exclusion, they are all correlated, and what you are describing as underserved as a large acute problem in Nigeria. So Nigeria, our dear country, cried a beloved country, is a tale of two countries. Lagos is not Nigeria's reality. Lagos, Abuja, and Port Harcourt are not Nigeria's reality. And even in Lagos, one of the things I want to put on the table is that there's a reality of the urban exclusion that is bigger than Makoko in Lagos. A whole lot of us who are into non-profit work, NGO work, everybody likes to go to Makoko. But the reality of the underserved in Nigeria and the excluded in Nigeria is far bigger than Makoko. Our typical urban Lagos view, which is Makoko's our typical urban view of the and reference of the Lagos underserved. And I'm glad to hear the last speaker talking about Enugu, for example. Where are the Makokos of Kano, Enugu, Ibadan, Benin City, Makurdi, and Lokoja, for example? The other thing about a tale of two countries is that when you draw the demography of a country, it's supposed to look like a triangle with, of course, the upper people at the top and, of course, the lower income at the bottom. But Nigeria is beginning to look like, more rather than a triangle, more like an hourglass, where the middle class, the middle class have collapsed to the bottom. Therefore, you have, of course, the wealthy at the top, but the middle class over the last few years have collapsed to the large section of the middle class have collapsed to the bottom. And that's the reality of Nigeria. Rather than be looking like a demographic triangle, Nigeria is looking more like an demographic hourglass with acute social inequalities. Of course, with a whole large section of our people being excluded and being underserved by any form of financial services, including housing, education, health, or whatever you want to discuss. So in terms of different lenses of seeing the underserved, you can, and it applies to financial inclusion, you could see the underserved from where different lenses of gender, you could see youth, you could see children, you could see the elderly. Each of these demographic lenses, when you triangulate it, and I know you also, these academics are here, when you triangulate it with sector indices like health, education, housing, commerce, financial services, and transport, it will reveal rich insights about the depth of how the depth of exclusion and underserved population in Nigeria. When you correlate gender, youth, children, demographic data with some of these sectoral informations, then of course there is the dimension of culture and sports and recreation, which also provide very interesting lens in terms of potential to triangulate and see deeper insights in terms of the depth of social exclusion that we have in Nigeria. Now I want to discuss a foundation problem of financial inclusion, which is digital identity. Digital identity is the biggest problem of financial inclusion. Digital identity essentially is knowing who wants to send money, because everything is running on the technology system. In the real technology world, everyone must have a digital identity, which is your identity in terms of who you are, which is digitized. Where do you live? What are your biometrics? So that you can say who is sending money in payments, who is sending money and who is receiving it. If anyone does not have a digital identity, they cannot participate in the technology rail for payments. So essentially, when you have a situation in Nigeria where a whole lot of our people, perhaps until recently, do not have any form of digital identity, they are totally excluded from the modern financial system. In an increasingly digital world, anyone without digital identity is excluded from being a citizen of the digital economy. So the issue of digital identity is actually a citizenship right. You can be a Nigerian citizen, but if you don't have a digital identity, you are not part of the modern economy. So it's a fundamental problem that we need to solve. And without having an inclusive digital identity that is pervasive, that everybody can be part of that digital identity system, we will not, they will not have an inclusive financial system. But a lot of things are changing and improving. And we must commend the current government for doing something very important, which is the National Identity Management Commission. That is the National Identity Number. BVN, Bank Verification Number, which is a digital identity, because you all know that that's what most people use here. You go to the bank, your BVN is the foundation. BVN over 5, 6, 7 years, that we're doing it over many years, is about 50 million Nigerians have BVN identity, digital identity. But through the dogged, sometimes painful push of the Ministry of Communications and Digital Economy, and sometimes we don't give them enough commendation for what they have achieved. We are going to have, by now, last year, we now have 93 million Nigerians with digital identity. And this year, we are going to have 100 million Nigerians with digital identity. Because of that, then the next challenge is how to now get every Nigerian, all those 100 million people with digital identity, how to ensure that they now have a formal financial account, because that has been the biggest barrier for them to come onto the financial rail. And that's the task for the financial service industry, for fintech players, and for all the banks for us to tackle together. The foundation has been so, even if we just get, and that would mean moving people with formal financial account from 50 million that we have today to potentially 100 million if we're able to convert all those people with NIN number to have a formal financial account. And they have been able to do this. Of course, the telcos have helped, because the difference between NIN and the BVN, which we used to do in banking, is that you have to go to a bank to do BVN. But with NIN, you can go to any telco agent. And that is what has helped NIN to generate a more digital inclusive identity system. You can go to any telco agent, it's far more inclusive, far more accessible. So again, let me put it on the table that digital identity has to be seen as a fundamental human right. All efforts must be in place to ensure everyone in Nigeria has a formal digital identity. Anyone without a formal digital identity is being decitized, if there's anything like that, from being part of a modern economy. It has to be taken as a fundamental human right for every Nigerian to have a digital identity with all the support and mechanisms put in place to achieve it, to tackle the problem of large social exclusion in financial services. So the case for financial inclusion, running towards my conclusion, financial inclusion expand opportunities. You can be paid from anywhere, and you can get paid from anywhere, and you can pay anybody from anywhere. And what that means is that when you combine that with things like logistics and e-commerce, your market is no longer limited to just your neighborhood. I always say that the farthest point in terms of reach of anyone without a formal financial account is the length of their hand, because that's what you can collect. You want to collect cash. But the moment you have a financial account, your market becomes far bigger than your village. That is the most powerful case for financial inclusion. When you combine that with e-commerce, where you can sell and trade online, and with modern logistics today, where if I want to sell my moi moi, if I know how to cook a delicious moi moi and how to send to Kano, all I need to do is, if I can get my order online, I can get paid, and I can pack my moi moi and go to Jibowu in Lagos and put the moi moi in Jibowu in one of the buses going to Calabar, and it will get delivered there. That is the power of financial inclusion when combined with e-commerce and logistics. It engenders inclusive prosperity. You can do business with anyone from anywhere. With a bank and financial account, you can also access formal credit and tap into your future income and invest today and create wealth for yourself. The poor are not poor. The reason why they look poor is that they are not able to tap into their income in the future and bring it backwards into today. That's what the rich does when they borrow money. Credit is all about tapping into the future income and bring it backwards so that I can use it to set up a business for myself. Access to credit, however, cannot happen if we do not know who wants to borrow and what is their cash flow. And that's back again to foundation issues in terms of why digital identity has to become a fundamental human right, the foundation of financial inclusion and the foundation of access to other forms of services like credit. Ordinary things like 200,000 naira can lift a lot of people out of 50,000 to start a micro business, micro credit. How do we scale it? How do we do it on a large scale? That's one of the things we must tackle. And digital identity is very fundamental, and access to financial inclusion are the things that will engender some of these things so that we can lift a lot of our people into inclusive prosperity. A farmer that can get paid, a smaller farmer can connect to the value chain of the big corporations or big aggregators or big farmers or big farms or big commercial farms like Ola, like Nestle, who are buying maize, and they can get them paid through an aggregation system. But the moment you don't have a financial account, a lot of our farmers are cut off from the opportunities of being part of the modern value chain for them to also sell their products. You do not have to live where you are to be able to get your maize to sell, to get sold to Nestle, because the aggregation system in place. But unless you can get paid, a lot of our smaller farmers are excluded from this opportunity. So these are the kind of things that financial inclusion engenders. But financial inclusion is made possible by technology. Financial inclusion through digital technology enables us to create low-cost business models that can bring a large section of markets that historically, when we used to discuss addressable market, we say they are not profitable. But digital technology crashes the cost of transactions. So just imagine that if I needed to withdraw, send money to 100,000 naira, 50,000 naira in the past, I have to go to a branch of a bank, I have to take a taxi, then I have to withdraw the money, then I have to physically maybe go to another bank to deposit the money. So the cost of doing a simple transaction is so enormous. But with a simple mobile technology, you can make it happen just at the tap of the finger. That is the power of digital technology. So the way the concept of, it is costly, we cannot find a profitable business model to serve the people in Kafancha, to serve the people in Lokoja, to serve the people in Makoko, has become crashed by digital technology, which has reduced transaction cost and is able to create sustainable business model to bring a large section of people who have been historically underserved or excluded into modern financial services. And the key technology that is working, that's making this happen, are things like mobility, which means on your mobile phone, you can go anywhere and do your banking. Cloud internet, as long as there's a cloud in the air, if you can get internet access, as long as there's a cloud in the air, you can get served and can do payments. Telecoms, radio signals, to do anything like USSD banking or digital identity. These are the technology that are driving, that has helped us to crash transaction costs today, to be able to get to, with potential for us to get a whole lot of people along with digital identity into the modern financial system so that we can make financial inclusion, can make financial services more inclusive. So that banking will no longer be tied to a place, but a bank will no longer be where I go, but banking will be what I can do anytime, anywhere, with anyone, from Kafancha to the rivers of Brass. Wherever I have, I can do my banking. No branches are needed because transaction costs have been crashed massively. So in concluding, what's the role of arts? And what can iRep do for financial inclusion? I want to put 3 things on your table for consideration for iRep. First, we need you to help us to unearth cultural insights, to understand the barriers to the use of financial services and financial technology among the underserved and the excluded, which is a major gap in what we are doing today. You in arts, you are the cultural experts. How can we work with you to understand, unearth the cultural insights that is inhibiting the massive adoption of financial technology and financial services and digital technology for a lot of people to get an inclusive financial system? Number 2 is that how can we work with you in terms of behavioral change and education to drive adoption of financial services among the underserved and the excluded, because you are closer to it. And the last one, of course, is advocacy for financial inclusion. You got the content that you generate in iRep from this program this year. How can we take some of those content and use it to do advocacy for financial inclusion? So, in conclusion, let me also thank you at iRep for doing progressive arts, like I've said when I started, to ensure that Nigeria becomes a country where prosperity is much more inclusive, a Nigeria that works for many more people. The potential for iRep and those of us financial inclusion player, the potential for iRep, for arts and film, that builds a structured and deliberate linkage with other sectors of society to make a difference for a more inclusive society where prosperity lives, not just in Magodo, but also in Makoko, is something I want to put on the table. Let me repeat that. The potential for arts and film to build a structured, deliberate is very important, deliberate linkages to make a difference, to link other sectors to make a difference. For us to build a society where prosperity is more inclusive, to ensure that prosperity does not just live in Magodo, which is an upper middle class district of Lagos for international audience, but prosperity will also live in Makoko, for example, where every youth and every child, both in Magodo and Makoko, can fulfill their God-given potential because they are financially empowered. Ladies and gentlemen, thank you for listening.
I hope you're hearing me, and I hope everybody's hearing me. But there's a lot of comment and applause in the house, and I'm sure many of them would like to engage with you. And thanks for the assignment that you have given to iRep. We are ready. We're ready to we go through the assignment that you have given us, and we are going to walk through it. This is being recorded, and we're also broadcasting on Instagram and on YouTube, and we're going to use this for further work. So don't be surprised if we come to you. There are also, apart from those who may want to ask questions in the house, there are some people here in the where I am who would like to ask questions about your presentation and probably about OP. But the most interesting thing for me, somebody said, it'd be like saying, now only me for here, never joined OP. My dolly no go pass today. It's unchanged. So, I mean, it's good. I mean, now we've seen you've been operating so silently now. Now we know what you do under the table. And all of us are coming on board. So let me privilege Raymond Bola Brown, who is a journalist and a public affairs analyst, to ask his question. Okay, you can come out here. Yeah, you can come out here because of light here.
Good afternoon, sir. It was a very interesting presentation, no doubt about that. Now, the thing is this, what about the Nigerian individual factor when it comes to financial obligations and financial discipline? First and foremost, in Nigeria, in most cases, when a person wants to establish a business, for instance, and it's a long-term business, our banks and financial institutions do not really give people long-term loans. Now, OP also, I believe you also do loans once in a while, but maybe 1 week, 2 weeks, 3 weeks. Then the idea of Nigerians thinking that when you get a loan, which is supposed to be for business, right? They decide to, maybe use it to buy a new car, get married, or get anything. So how do we change the mindset of the average Nigerian when it comes to loans, especially when it comes to paying back? And how can financial institutions understand the fact that long-term loans are needed in a country with hyperinflation? Thank you.
In other words, environmental and cultural factors. I think you should just note it, and let's take 1 or 2 more questions if they are ready. Otherwise, you can answer that now. Is there anybody who wants to ask a question? You can raise your hand or just simply indicate. Oh, there are hands. I'm trying to see. Omot, okay. Okay, Omotui Olowu, let's start with you. Oh no, Omotui Mabawandu. Oh, Mabawandu. Dr. Tui, actually. Dr. Tui, please.
Yeah.
Go ahead.
Hello, Jaman.
Yeah, go
This is
ahead.
quite interesting. Yes,
Yeah.
okay. Now, Olumide, Oluwakamu, thank you so much for this wonderful presentation. Of course, you look like one Olumide Akamu that I used to know in Ife those days. If you are the one, I'm not surprised at all that you discuss so eloquently. Now, I saw those your figures. Interesting. We all know all these figures. Financial exclusion, financial underserving actually affects housing, finance itself, education, and health. Yeah, of course, you're talking about digital identity. Now, the question is that all those four things actually feed into an economy and quality of life of everybody. But I was actually looking at the big role of government in enhancing access to all these things. We cannot put all these funds in the hand of financial institutions, but actually government that can actually figure out how do we, first of all, build digital identity. You know, of course, we have also registration that we're not using. Secondly, how do we use that to drive housing? How do we use that to drive education and health? But those three things, housing, education, health, and housing, are very core to people's ability to access financial, to have financial access and be able to really achieve prosperity. You rather think that the thing should stay with government mainly, or stay with financial institutions or NGOs partly? Thank you.
Okay, thank you very much. That's the second one. I'll plead with you that we take the next two, and then you can answer. Kumi Akiade, just unmute yourself and take your question.
It's a pleasure to join this kind of exciting conversation. Though I joined quite late, I joined almost at the later part of the presentation. However, coming from my background in finance, I've always been an advocate of government playing its proper role as a regulator. And issue of identity management is actually key to everything. Data is life. Data is power. And we have different platforms, NIN, BVN, SIM registration, actually, and none of them seems to actually have addressed the issue of identity management. We're still in an era of guesswork. When you ask about population of Nigeria, the kind of figures you get and the disparity clearly tells you that we have really not understand what the digital economy or what global village is all about. So my question is this: we can continue to discuss most of these things, but if we don't solve the fundamentals, which is identity management, perhaps we'll just be actually, trying to scratch all these things on the surface. We all know that the economy of Nigeria is actually performing less than 30%, in fairness, with what I've seen. Look at the banking sector, all those things. So if we're addressing this thing, we should be hitting the nails on the head. The identity management, it's actually key to everything. And digital identity, it's single point, and it's easy to maintain if we get the right solution. Like personally, I prefer this kind of solution as far back as 2010. I was privileged to have stayed better part of my adult age in Russia, where I was trained. And I know what identity management is all about, even in my teens. So I want the speaker to also kind of focus on that, because one of the things that gave rise to the fintech is actually their ability to manage digital identity, which I don't think our banks are really doing very well, not the government. Thank you.
Okay, well, thank you very much. That is the third one. Let's take the last one, and then Mr. Akomu can then go ahead and answer all. Edmond Onwulire, Dr. Edmond Onwulire.
Thank you very much, sir. I want to thank the presenter for the very thought-provoking presentation he has made, talking about getting the underserved involved in a very critical area in our development now, which has to do with, if you want to call it a cashless economy, digital economy, and all of that. But my concern, sir, is that yes, you've pointed out one of the limiting factors, which is that of digital identity, which some other persons who spoke earlier also have mentioned. But I want to look at another area that I also consider is deserving of very serious attention at this particular time. That is in the area of financial literacy itself. Now, how many Nigerians are in the know that things are moving at a fast pace globally, and we have no option than to, get involved? How many Nigerians know that, like you illustrated, that the distance between you and the money you can get if you're not involved in this digital business is just the length of your hand, as far as you can stretch it to collect cash? But with technology in place, your money is everywhere in the world. It is possible to get your money or to send money anywhere in the world. But how many Nigerians are aware? And you have come up with very frightening statistics. Those are our realities. The number of what is it called now? Multidimensionally poor Nigerians we have in various parts of the country. And the razzmatazz in Lagos, Abuja, Port Harcourt, and some other places kind of give us the wrong impressions about our condition. But now, to land, sir, yours is a private sector driven business, and you are in it for business. How can you, as a private sector person, even though you have given iRep some kind of assignment, how can you as a private sector person begin to point in the direction that we need to go? First and foremost, to get people financially aware, to get people to adopt the digital identity that is very important in becoming available to become citizens that can migrate to the digital, to what the digital economy is offering. And finally, sir, with our poor internet penetration, how can we really get this working? Thank you.
Well, thank you very much. I just like to also remind that the next speaker is Bumi Lawson, who is also in the house. Earlier on I call her Madam Microfinance. So some of the questions you can ask now, you can ask because somebody said Mr. Akomu looked like a professor, so he's afraid to ask questions. I can assure you that Bumi Lawson looked like your sister. So you'll be able to ask her, she'll be able to take on that question. So Mr. Akomu, please, we have less than 15 minutes to the end of this. Thank you.
Yeah, thank you. Thank you for the questions. The doctor that said Olumide, that means you know me from way back. Truly, when I get Olumide, then that must be people that knew me from school. Until sales taught us that having a name that is only 2 syllables so that your customers can remember your name. When I used to work in Benin City, so it's good to reconnect. I'm sure we had Ife together maybe around the period. So we thank God for everybody. So on the questions, the issue of mindset and financial literacy, I think it was talked about by the first and fourth question, is very important. There cannot be just financial inclusion alone. If people don't know how to use money, how to save, what to do, how to plan for the future, even though they have a bank account, they will sub-optimize their potential. So these are some of the things that we need to do together. And I'm sure Ms. Lawson can also speak more to some of these things because she runs a microfinance banking business. I run one and run another one, for example. I agree that private sector cannot solve all the problems alone. There's a role of government in terms of we need a kind of public-private partnership. There's an area where market solutions like are proposed in terms of innovation will work, but there's also a role for government in terms of managing some of the other issues like identity. Identity is a public sector innovation mandate, and it will be important for us to continue to drive innovation both in the public sector so that those in the private sector can leverage it to create commercial models that can get to reach many more people. So I agree that public-private partnership working with government is very important. Now, the issue of identity and all the diverse identities platforms that we have, SIM card registration, NIN, and so on, is a developing issue. I think what's important is that NIN had come from nowhere to become biggest and most accessible. And I think if we maintain the pace at which NIN is growing, bringing in 5, 6, 7 million additional people in a year, it can become the real platform for us to do everything. So in my view, yes, with technology, maybe we can find a way to also link it with SIM card registration and so on, and BVN and other kind of data, voters card. But to keep it simple, let us just continue to deepen access to NIN. Make sure it works very well. Make sure people can use it to verify identity of who they want to deal with commercially. Anybody wants to borrow, let me verify that you are actually who you are, and I can actually verify that you actually live where you claim. Then the confidence to lend by those who are lending in the financial system will be stronger. So that is very important. I would say let's just continue to deepen NIN where we can link with other data, all and good, but it should not stop us from continuing to push and drive the scale of NIN and the scale of NIN and its growth that we have seen over the years. The issue of internet penetration is a challenge, or is getting better. Internet penetration is growing rapidly. It used to be below 50%. Internet penetration in Nigeria now is going to be like 60%. Every Aboki, every Ganiyu who is a gatekeeper is on Facebook. And that tells you that it's probably, and of course with smartphone pricing crashing due to secondhand that I use and I pass on, a lot of more people are coming onto the internet through their phone. And if we can maintain that pace, plus what we will do with USSD banking, if you don't have an internet, you can do star X, whatever, and do some banking for yourself. We can make sure that everybody is covered. But the most important thing is that we all need to work together. Whether we are doing financial literacy or not, the quality of education that we want to do in literacy needs people like yourself in arts, because you can enrich the quality of our message, the quality of engagement, and the insights and the understanding we have of the challenges of getting many more people to adopt digital financial services, which when they do, will be able to lift a lot of people into inclusive prosperity. So, ladies and gentlemen, thank you for inviting me, and have a very good rest of the program. And I'm sure Mrs. Lawson, I look forward to also listening to Mrs. Lawson too, who is our icon in this financial inclusion space. Thank you.